Hello, ladies and gentlemen. Welcome back to another episode of Trading for Life. Happy long weekend. After a long wait, the moment has arrived. Trump will officially take office in the upcoming weeks, and things are bound to get wild. As you've seen over the last 48 hours, the markets have been crazy. Mr. President's meme coin launched, skyrocketing to $70, only to crash back down by more than 60%, settling at $35. It's a roller coaster, straight to the moon and back. With Trump returning to office, expect increased volatility in both the crypto and stock markets. Buckle up and stick around because I've got some crucial news and data to share with you. And remember, if you love trading as much as we do, don't forget to like this video and subscribe to the channel. Let's dive right into the headlines. TikTok went dark late Saturday, but was back online by midday Sunday. The app's U.S. shutdown followed the Supreme Court's decision on Friday to uphold a ban unless ByteDance, its Chinese parent company, divested its U.S. operations. The ban was set for Sunday, but TikTok announced it was working with service providers to restore access. We thank President Trump for providing clarity to our service providers, ensuring no penalties for supporting TikTok's 170 million U.S. users and over 7 million small businesses. As of January 20, Donald Trump's second term as President of the United States has officially begun. During the election, Trump made numerous policy promises to secure votes, covering topics like immigration, international trade, and even cryptocurrency. However, one of the key issues that resonated with voters, and perhaps the reason behind his victory, was his economic agenda. Now, it's time for Trump to deliver on those promises. And it's not just his voters who are paying attention. Wall Street is watching closely too. Let's not forget Trump's famous tweet from 2019. I'm telling you guys, in the future, the crypto world will be bigger than ever. His policies and stance on cryptocurrency could shape the market in ways we can't yet predict. Stay tuned. It's going to be an exciting term. If you want to see more, remember to subscribe and follow us on X, where we're posting a lot of valuable information. Don't miss out. Tesla shares surged Friday, benefiting from the final stretch of the Trump bump ahead of Inauguration Day. Investors are optimistic about Tesla's future, fueled by CEO Elon Musk's alignment with Donald Trump, which some are calling a bet for the ages. The focus isn't just on electric cars, but on broader opportunities that could emerge this year. Tesla's stock jumped 6% in afternoon trading, adding $80.2 billion to its market cap, now standing at $1.41 trillion. Since Trump's election win, Tesla shares have soared 74.5%, boosting its market value by $601.3 billion. A new law is set to provide greater tax relief for natural disaster victims, offering some comfort to Los Angeles County homeowners facing billions in wildfire losses. While firefighters battle ongoing fires with a death toll of at least 24, and Wells Fargo estimates insured losses could hit $30 billion, tax relief may soon ease the financial burden. Experts note that changes to federal tax deductions will help wildfire victims recover unreimbursed losses, just as they will for victims of recent hurricanes across the country. Now let's dive into some macro and data I want to show you guys. The market capitalization of the S&P 500's top 5 stocks now equals the combined size of the bottom 407 stocks. Apple, Nvidia, Microsoft, Google, and Amazon collectively boast a staggering $15.3 trillion market value. These companies have added $5 trillion in value since the beginning of last year. For perspective, these 5 giants are now worth nearly as much as the entire stock markets of China and Hong Kong combined. Additionally, they represent a record-breaking 24% of the entire U.S. stock market's value, a truly historic milestone. The Nasdaq 100 relative to the M2 money supply ratio has reached 0.98, matching the peak seen during the 2000 dot-com bubble. This ratio has doubled since the market bottom in October 2023. During this period, the Nasdaq 100 has surged by 49.5%, significantly outpacing the M2 money supply's increase of just 3.8%. Interestingly, the ratio hit a low of approximately 0.10 in 2009 and has taken 15 years to return to these record highs. In contrast, a similar surge occurred during the dot-com bubble in just 5 years. Clearly, big tech continues to grow larger and dominate the market. History has been made again in stocks. Over 68% of the S&P 500 stocks have closed higher for 5 consecutive days, matching all previous records since 1928. If this trend continues on Tuesday, it will set a new record streak. This indicates a significant improvement in the market's breadth. The last 2 times such a streak occurred were in January and June 2019, both of which resulted in further upside for stocks. A similar pattern was observed in September 2009, leading to an 8% rally in the S&P 500 over the following 3 months. The question now is, can bulls capitalize on this momentum? U.S. leveraged funds' long bets on the U.S. dollar have surged to approximately 210,000 contracts, marking the highest level in 6 years. Hedge fund net long positioning has increased by 400% in just 3 months. In comparison, fund positioning was net short in mid-September, when the Fed pivot narrative began. Since then, the U.S. dollar index has risen by 9.5%, reaching its highest level since November 2022. At the same time, the EUR-USD currency pair has declined by 8.8%, currently sitting at 1.02, just 2% above parity. The U.S. dollar is rallying as if the Federal Reserve is actively hiking rates. Now let's dive into the S&P 500 heat map to see what's going on. Microsoft was up 2.4%. Apple was down 3%. Tesla and JP Morgan were both up 8% for the week. Meta remained flat. Nvidia was up 1%, while Amazon rose more than 3%. Eli Lilly saw a decline of more than 9%. The Fear and Greed Index is back at a level of 38, indicating fear. Will we see a return to neutral levels this week? Let me know your thoughts in the comments. Only about 60% of the S&P 500 companies have scheduled earnings reports so far. So any dates you see for companies like Advanced Micro Devices, Palantir Technologies, Amazon, Alphabet, and others are merely estimates and not confirmed on this calendar. That said, the fourth quarter earnings season is the longest and will generally extend into March, but we are currently in the thick of it. This week's most notable earnings. Monday, Martin Luther King Jr. Day, stock markets closed. Tuesday, Netflix, United Airlines, Charles Schwab, Interactive Brokers, Capital One, 3M, DR, Horton. Wednesday, Procter & Gamble, Johnson & Johnson, GE Ventures, Abbott Laboratories, Halliburton, Kinder Morgan, Alcoa. Thursday, General Electric, American Airlines, Texas Instruments, Intuitive Surgical, Freeport-McMoRan, CSX. Friday, Verizon, American Express, NextEra, Energy. Now let's dive into the charts. We'll start with the SPY 4-hour chart. Here's my analysis for both the bear and bull sides. Bullish scenario. A gap up above $603 would signal a bullish trend for the SPY, indicating potential upward momentum. Bearish scenario. If we experience a significant rejection around $600, it could suggest that another new low is on the horizon. Next, let's look at the QQQ daily chart. I still believe that QQQ topped after breaking this trend line. If the price falls below $503, it will indicate a significant bearish shift, suggesting that the bears are winning this battle. Keep an eye on this level, as it will be crucial for determining the next moves in the market. Now let's wrap up the video with the key events we have coming up. Remember, the markets will be closed on Monday for MLK Day, and it's also the day of the Trump inauguration and the Davos World Economic Forum. Here's the week-ahead watch list for January 20th to 24th, Monday. MLK Day, U.S. markets closed. Trump inauguration, Tuesday. Earnings from Netflix, United Airlines, 3M, and Charles Schwab. Wednesday. Earnings from Procter & Gamble, Johnson & Johnson, Abbott Laboratories, and GE Ventures. Thursday. Jobless claims. Earnings from General Electric, American Airlines, and Texas Instruments. Friday. Manufacturing and services PMIs. Existing home sales. Alright folks, that's a wrap for this video. If you enjoyed the content, don't forget to like and subscribe. If you have any questions or thoughts, feel free to drop them in the comments, and I'll respond as soon as possible. Thanks for watching, and I'll catch you in the next one. Take care.